Let's not bury the lead. Year-end price target 4,100. Do you still see upside risk to 45?
So look, we take a very quantitative approach to our targets, John. And as we go through the data, we have a few things that do point us to that 4,500 level. And so we've said that's not our base case. The preponderance of the models are getting us to 4,100. But 4,500 pops up a couple times. We see it on our valuation model, which bakes in some expansion if inflation moderates, as many have expected it to this year. And if we do get a couple of Fed cuts at the end of the year. Now, I know that's a more precarious assumption, but that's what the model gives us. If you look at the sentiment issue, which I think is maybe a little bit less controversial. If you look at the depths of individual investor sentiment at the end of last year, we were basically down around financial crisis lows for an extended period of time. And historically, when you've been below 10% in favor of the bears over the bulls, it's set you up for about a 15-16% return on the year. So that's something that gets us to a more constructive number at the end of the year. 4,100 is the base case. We still like that target very much, but we do feel like when we look at the sentiment work in particular, that if we're wrong, the bias is more to the upside in markets than to the downside.
Laurie, there are phrases that people hear people at banks say a lot, things like under-owned, over-owned. We came into the year and they said that tech stocks was under-owned, and that's what suggested, really validated the rally we've had year to date. Where are we on that, and how do you gauge what is under-owned and over-owned?
So we're still pouring through the 13F data. So that's something that could potentially give us some clues. But I'll tell you, John, the street feels like it's flying blind a little bit on the institutional side because the CFTC data hasn't been coming out. And something that I like to watch there is the level of NASDAQ futures positioning. Now, what among asset managers in particular, that's been a great barometer, I would say, for the last 6 to 9 months. And it was something that really told us the market was about to kind of fall down and stumble a bit back in August because the NASDAQ futures were looking a bit over-owned. Last we saw a couple weeks ago, it looked like we were sort of midway through a rotation back in. We were watching that data very closely, but of course the CFTC issue, we just don't have that data at this particular point in time. It does feel to me, though, like based on conversations, there are so many people who hate this rally, who hate the rebound in tech stocks. It feels to me like they're still under-owned at this point, but we'll see what the data shows when we finally get it back.